You ever get that feeling that Wall Street insiders are playing a different game? Like they have a secret playbook that you're just not allowed to see? Well, guess what? You're not wrong. And today, we're going to tear out the pages of that very playbook. So let's just ask the question that's on every retail investor's mind, especially on those really weird days. Is the whole game just rigged against us? Look, the answer isn't a simple yes or no. It's more complicated than that. But what is absolutely true is that the big institutions, the whales of the market, have a set of strategies, a playbook, they use over and over again to get a huge advantage. So in this explainer, we're going to open that book and show you exactly what they're doing. So here's our game plan. First, we'll talk about why the playing field isn't exactly level. Then, we dive deep into the manipulator's playbook to expose their favorite tactics. We'll see how they mess with your emotions. And then, the best part, we're going to build your defensive strategy and give you a checklist of red flags so you can spot the stuff from a mile away.
All right, first things first, we got to get one thing straight from the jump. The stock market is not and has never been an inherently fair or level playing field for everybody.
And this quote right here, it really gets to the core of why this happens. In the short-term game, it's zero sum. For a big fund to get that amazing bargain basement price on a stock, someone else has to be panicking and selling it to them at that rock bottom price. And often, that someone else is you. And boy, do they have the tools to make that happen. They get information way faster than we do. They have these super sophisticated algorithms and huge teams of analysts. They have so much capital they can literally move markets. But you know what their most dangerous weapon is? It's their deep, deep understanding of our psychology, how to make us panic and how to make us greedy. Okay, so let's crack open that playbook. Let's look at the actual plays they run to create these situations where they win and, well, someone else doesn't. The first play is a classic. It's called short and distort. Think of it as the evil twin of a pump and dump. Instead of pumping a stock up with hype, they bet against it by shorting it, and then they unleash a targeted campaign of fear, uncertainty, and doubt, FUD, to make the price crash. It's all about manufacturing panic for profit. And it's a four-step move. First, they quietly build up a giant short position. Then, the attack begins. They'll drop a negative research report, or suddenly you'll see a dozen negative articles hit the news at once. That FUD spreads like wildfire on social media. Retail investors get spooked and hit the sell button, and bam. The price tanks and the short sellers walk away with a fortune. Now this next one is just devious. You know your stop loss order? That safety net you set up to protect yourself from a big drop? Well, they can turn that safety net into a target. Their systems can literally see where huge clusters of stop loss orders are sitting. And here's how the hunt goes down. Their algorithms will push the price down just enough to hit that big cluster of stops. That triggers a waterfall of automatic selling, pushing the price down even further. And guess who's sitting right at the bottom with their buy orders ready to scoop up all those cheap shares? You got it. Okay, next up are two really sneaky digital tricks. First is spoofing. This is where a manipulator puts a giant sell order on the books with zero intention of actually selling. It's a ghost. It's just there to create a fake wall of supply and scare you. Then you've got wash trading. This is basically playing catch with yourself, buying and selling the same stock back and forth to create the illusion of a ton of volume and excitement. Both of these are just pure digital smoke and mirrors. But here's what you've got to understand. All these technical tricks, the spoofing, the shorting, they're just tools. The real target isn't the ticker price on your screen. The real target is your brain. It's a psychological war, plain and simple. This quote says it all. The whole game is about controlling the story. If they need to buy a bunch of shares on the cheap, they'll create a narrative of fear and disaster. When they're ready to sell their massive position for a profit, suddenly the narrative is all hype and this stock is going to the moon. They are literally weaponizing fear and greed against you. Okay, tell me if this sounds familiar. You buy a stock you really believe in, and then immediately it drops like a rock, maybe 10 or 15%. You freak out, you sell for a loss to cut the pain. And then you watch in agony as it skyrockets without you. That, my friends, is a shakeout. It's a deliberate, sharp price drop designed specifically to scare out the nervous investors, the so-called weak hands, before the stock makes its real move. All right, that was the bad news. The good news? Knowing their playbook is half the battle. So now, let's build your counter playbook. This is how you defend yourself and maybe even use their tricks to your advantage. So, your first line of defense is all about mindset. You have to start thinking long term. All this short term manipulation is just noise if your time frame is years, not days. Second, you have to question every single narrative you hear. When a scary story pops up, just ask yourself this one simple question: who benefits if I believe this and panic sell? And finally, follow the real money, not the hype. Public filings like Form 4s and 13Fs show you what insiders and institutions are actually doing with their money.
Now let's get practical. Rule 1, never ever use market orders. Always use limit orders so you control the price you're willing to pay or accept. 2, don't go all in at once. Scale into your positions gradually. If they manipulate the price down after your first buy, great, you just get to buy more at a discount. And finally, learn some basic technical analysis. Understanding key support and resistance levels can really help you tell the difference between a real organic price move and a totally manufactured one. And to make it even easier, I've put together a simple checklist for you. If you start seeing 2 or 3 of these things happening at the same time, your manipulation alarm should be blaring. So first, watch out for a sudden media storm of negative articles all dropping at once. Second, look at the volume. If a stock plummets on super low volume, that's a huge red flag. It means there's no real selling pressure behind it. Also, be really suspicious of those anonymous research reports that come out of nowhere with insane, scary price targets. And keep an eye on the last 15 minutes of trading. That's a common time for funny business.
Also, pay attention to social media. Is it suddenly flooded with an army of negative accounts? Check the options market for huge, unusual bearish bets. Most importantly, does the price action make any sense compared to the company's fundamentals? If the business is crushing it but the stock is tanking for no reason, be suspicious. And that classic sharp drop that instantly reverses in a V-shape, that has the fingerprints of a shakeout or a stop-loss hunt all over it.
So what's the bottom line here? The game isn't always fair, no. But you are not powerless, not even close. Understanding these tactics, knowing what to look for, and keeping your emotions in check, that is your best defense. Knowledge is the armor that protects you from their biggest weapons. So, you've now had a peek inside their playbook. These tactics aren't a secret to you anymore. So the only question left is, now that you know, how are you going to play the game?